and BloombergRadio.com. This is Bloomberg Markets.
Coming up, we're going to discuss an interesting story about how U.S. tourism may be impacted after several countries, including Japan, have issued travel warnings against the U.S. Plus, we'll take a look at the housing market and how it's performing amid ever lower interest rates. But first, let's go to Greg Jarrett of Bloomberg News for a Bloomberg Business Flash. Greg, what are you looking at?
Well, I'm looking at stocks that continue to climb around the world after China's law of stronger than expected daily fixing of its currency eased fears about a worsening trade conflict. As long as we're talking about currencies, President Donald Trump once again took aim at the U.S. currency, taking a step closer to scrapping a long-standing official support for a strong dollar. The president tweeted the Fed's high interest rate level in comparison with other countries is keeping the dollar up. Trump's tweets escalate his complaints over the dollar's value and the Fed as he wages an increasingly heated trade war with China. Nikolai Mai, PIMCO portfolio manager, tells Bloomberg he sees a Fed cut coming in September.
Markets are betting that the Fed is going to cut rates in September. I think that's probably a reasonable probability. And then probably looking forward then to another rate cut again in December or thereabouts. Really what we've got to see now, I would say, is a little bit more follow-through from the data from the U.S. side, whether we see deterioration in data as we've seen pretty much everywhere else. And if that's the case, then certainly thinking about short dollar positions makes sense.
We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. The S&P 500 is up 1.2%, up 35. The Dow's up 0.8%, up 222. And the Nasdaq's up 1.5%, up 118. The 10-year is down 6/32. The yield 1.75%. West Texas Intermediate crude is up 3.3% at 52.80 a barrel. COMEX gold is down 0.7% at 15.0920 an ounce. The dollar yen 106.13. The euro $1.1210, and the British pound $1.2138. That's a Bloomberg Business Flash. I'm Greg Jarrett.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
A number of countries have come out and issued warnings to residents who might be thinking of traveling to the United States in the wake of some of the mass shootings. The latest to do so is Japan. The question is, how is this, among other things, I mean, aside from the human tragedy that we have seen with respect to these mass shootings, how will this affect the tourism industry and the international appetite to go to the United States? Joining us is Dan Wasilek. He's senior equity analyst with Morningstar in Chicago. Dan, so let's just get started there. Do you think that these types of warnings, the latest being out of Japan, will impact the tourism to the United States?
Well, I think what we've seen in past terrorist attacks, for example, in France, is that yes, I mean when these human tragedies do occur for a period of time, that can subdue travel to that country. That being said, international travel as a percent of overall travel within the U.S. represents about 4, maybe 5% of total room nights. So, just to give a little bit of context there.
So, Dan, it's interesting. Have you seen any impact, I guess, just historically from geopolitical issues, just generally speaking? I know you mentioned international is kind of a small piece of the pie, but historically, has it been an issue that the companies have called out?
Yeah, well, some of the data that we see is that actually their global share or our global share of international travel, it's been declining for the last 3 or 4 years. So in 2015, our share of international travel was around 13.7%. Last year, it ended at 11.7%. And it's probably reasonable to assume that some of that has to do with, trade tensions more recently, immigrant rhetoric, the recent warnings around the mass shootings and hate crimes, and perhaps other things like a strong dollar. But, this is something, that's all these add up to kind of a picture where the U.S. is slowly been losing some share here.
Where are we losing share in the United States? In other words, where are tourists sort of coming less from? What parts of the world are people avoiding the U.S. In a way that they hadn't been in the past?
Yeah, I'm not sure, what countries are, maybe shying away more from the U.S. I know, actually, China is one where, last year represented the first year where Chinese travel to the U.S. was actually negative growth. So that's one region. Marriott had their call this week, and there was a little bit of discussion in the U.S. that the top 25 largest markets, that there has been a little bit of a slowdown in some of the demand that they've been seeing there too, which maybe kind of supports the overall point of the U.S. for various reasons, losing some share to of international travel coming to this country.
So, Dan, I'm looking at the hotel stocks right here. It looked like some good, solid double-digit gains for the stocks year to date, led by Hilton up over 30%. What's the investor call out there in the market on hotel stocks right now?
Yeah, these are good business models. The growth is really driven by having hotelers join these brands, and that type of growth for some of the larger companies like Marriott and Hilton is around mid-single digit. I guess the one potential or two potential warning signs I would say is, some of the travel slowdown that we've seen recently, some driven by geopolitical events and others just by cyclicality slowing down would be one thing. And this year represents the 10th year that we're going to have positive demand growth, and that's a pretty long time. Typically, the cycles last maybe 7 to 9 years, so we might be getting a little bit long in the tooth as far as this cycle. But, otherwise, good business models give you pretty good growth, and I think, that's being rewarded in the marketplace today.
Dan, I'm struggling to sort of put these two things together, the idea that the U.S. is losing share when it comes to international tourists, and yet you're seeing solid growth at some of these tourist-focused chains like Marriott. Where is the growth coming from?
Yeah, so really it's less about, room night growth. Rooms being filled is certainly one driver of growth, but even a bigger driver for these guys is getting, boutiques to convert into, say, a Marriott flag or brand, or have third-party hotel owners decide to build a new hotel using the license of a Marriott brand or a Hilton brand. And it's that unit growth that is driving, again, mid-single-digit growth for these companies. So even if the revenue per available room or the amount of people that are going into rooms, even if that's slowing, and it's slowed for probably like 2-3% growth last year to 1-2% growth today. That's a smaller growth driver factor relative to the units that these guys are seeing, the unit growth that these guys are seeing.
Dan Wazalek, thanks so much for joining us. Dan is a senior equity analyst at Morningstar based in Chicago, giving us his thoughts on the hotel business. And, the language that Japan had in their statement was just amazing. And I'll quote here, Japanese residents should be aware of the potential for gunfire incidents everywhere in the United States, a gun society, and continue to pay close attention to safety measures. So I found that language just kind of stunning. But it's interesting that Dan mentioned as it relates to the hotels, it hasn't been much of an issue. They only get a relatively small percentage of their total revenue comes from international travel. Most of it's U.S. domestic. So
yeah, I think though it's really important to note it's hard to know how much these warnings are pushing international investors, discouraging them away from the U.S. Yep. How much it's the politics, and how much it really is just a function of the strong dollar, because there's a pretty direct correlation there too.
Absolutely. Let's head over now to our 99.1 studios in Washington D.C. to Nathan Hager for World and National Headlines. Nathan.
Paul, more than 200 mayors of cities affected by mass shootings have signed a letter urging the Senate to come back to Washington and act on gun safety legislation. That includes the mayors of El Paso and Dayton. So far, Senate Majority Leader Mitch McConnell has opted not to act on bills that have been passed in the House, but Bloomberg's Kathleen Hunter reports he is under increasing pressure.
He's up for re-election next year. He's potentially more vulnerable than he was 6 years ago in 2014. He was viewed as potentially vulnerable then.
President Trump has said he supports expanded background checks, but doesn't see the political appetite to renew the assault weapons ban. Michael Bloomberg, owner of Bloomberg Radio parent Bloomberg LP, founded and helps fund the gun violence prevention group Everytown for gun safety. The Iowa State Fair begins today. It's a traditional stop for presidential candidates every 4 years. And ahead of it, the latest poll of Hawkeye State Democrats shows Joe Biden in the lead, 26% tell the Monmouth University poll. They will head to their local precinct on caucus night, February 2nd. That lead goes up among so-called virtual caucus goers, those who plan to vote online or over the phone that night. Biden's lead with them is 37%. Speaking of Iowa, Major League Baseball's quest to expand its viewership is taking it to a field of dreams.
Hey, is this heaven? No. It's Iowa.
The league says the New York Yankees and Chicago White Sox will play one game next season in Dyersville, Iowa. That is where the classic Kevin Costner film was made. MLB says it'll build an 8,000-seat stadium starting next month with windows in the right field wall so you can see the cornfields. That game will take place August 13th, 2020. Global News on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts. in more than 120 countries.
Thanks, Nathan. Now, with our other top stories, I'm Michael Barr. This news update is brought to you by National Realty, NRIA developers of high return income producing properties for investor partners. See them at nria.net. The European Union's uncompromising stance on Brexit makes progress toward a new deal very difficult. That's according to UK Foreign Secretary Dominic Raab. Bloomberg's Alex Morales in London has more on Raab's meeting with his U.S. counterpart Mike Pompeo.
Raab said Britain's new government will strive every sinew to reach an acceptable deal and stressed that there is a deal to be done. But he then warned that if the EU insists that there can be no change to the withdrawal agreement, then that makes it very difficult to see how we can move the negotiations forward. Raab stressed the UK's intention to leave the bloc on October the 31st, with or without a deal, and said that he'd like to agree a trade deal with the US as soon as possible thereafter. In London, Alex Morales, Bloomberg Radio.
Stephen Ross, the owner of the Miami Dolphins and an investor in Equinox Gyms and SoulCycle, defended his decision to hold a Trump fundraiser, saying he likes to engage directly and support the things I deeply care about. After reports of a planned Trump luncheon at Ross's home in New York's Hamptons drew boycott threats, the billionaire said he engages with political leaders out of deep concern for creating jobs and growing our country's economy. U.S. immigration officials say raids at 7 food processing plants in Mississippi resulted in 680 arrests. ICE Acting Director Matthew Albans says the arrests from yesterday's raids may make it the largest workplace sting in more than a decade. This teen pleaded with ICE officers to let her see her mother as she was being led away into a bus for processing.
¿Verdad que ella es mami? Ella es, no llores, mami.
Please, could I just see my mother, please?
Please.
Authorities say about 600 agents fanned out across the plants. A new UN science report on climate change says cutting down trees is making the world hotter and hungrier. Intergovernmental Panel on Climate Change Chair Ho-Sun Lee called for protecting land to curb carbon emissions, help nature, and ensure food security.
Land is undergoing human pressure, and land is part of the solution, but land cannot do it all.
Coming up, a check on markets with Bloomberg's Greg Jarrett, plus your top business headlines. I'm Michael Barr. This is Bloomberg.
Politics, policy, power, and law.
I'm Amy Morris.
I'm June Grosso.
We'll hear from Cory Booker's campaign about his push against gun violence.
Foreign purveyors' use of copyright lawsuits has judges seeing red.
Today at noon on Bloomberg 1130.
Bloomberg, the world is listening.
CME Group Micro E-mini futures contracts are available at IBKR at the lowest commissions. Trade futures on the S&P 500, NASDAQ 100, Dow Jones Industrial Average, or Russell 2000 at 32 to 47 cents per contract, all in. Micro E-mini futures contracts let investors trade futures at a fraction of the upfront commitment of standard E-mini futures. Futures are not suitable for all investors. The amount you lose may be greater than your initial investment. To learn more, visit ibkr.com/CME Mini.
Attention investors, stocks got you sideways, worried about volatility? Then diversify into Class A income-producing property units for up to 21% cash flow. National Realty's Class A property fund includes only prime income-producing new construction properties. These are built far below market value in Brooklyn, Hoboken, West New York, and Delray Beach, Florida. You're secured on high-demand mid-rises. You're diversified with income from multiple properties. You're prioritized in cash flow with substantial bank-appraised equity and solid real estate backing you. National has a 12-year track record of success with over $800 million of property managed. Now's the time to diversify with up to 21% apartment-backed financial units for your IRA or monthly cash flow. Once you see these Class A locations, you'll wonder what took you so long to call 201-210-2727. Call 201-210-2727. An offer to buy or sell any security is only made by our private placement memorandum. Read it first and invest wisely. Past performance is no guarantee of future results. National is a real estate development firm. See us at nria.net.
Interactive Brokers Premium Technology and Automation provides clients with lowest cost access to global markets. Access stocks, options, futures, forex, fixed income, and ETFs on over 120 markets in 31 countries and 23 currencies. Fund your account in multiple currencies and trade assets denominated in multiple currencies from a single account. Learn how Interactive Brokers minimizes your costs to maximize your returns at ibkr.com/YIB.
Is your brand growing? Products and services selling? Is your advertising making an impression, sparking sales, educating customers? Many brands today are undermarketed, not because budgets are too small, but because advertising is poorly planned. Your agency must identify a clear objective, create a solid strategy, and target the right audience. It must research the competition, leverage your unique selling proposition, craft a comprehensive, measurable multi-platform media plan, and populate it with smart creative. Bluetooth Creative Group, a leading metro area advertising and marketing solutions provider, is an expert at producing strategic, effective advertising. From broadcast, print, and collateral to digital, social, retail, and sales promotions, so your brand promise can generate sales. Bluetooth Creative Group. Learn more at bluetoothcreative.com.
The David Rubenstein Show, peer-to-peer conversations. David sits down with Secretary of State Mike Pompeo.
Every morning, the first thing I do is read about China.
This afternoon at 5 on Bloomberg 1130. Brought to you by Wells Fargo Healthcare Banking. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
All three major indices in the U.S. are higher. Tech companies are leading the way. The stocks, Europe 600, rose the most in 7 weeks. Gold's down. Treasury yields are inching higher, and the dollar's weaker. Oil futures in advance. We check the markets every 15 minutes throughout the trading day here on Bloomberg Radio. S&P 500 is now up 1.4%, up 40. The Dow's up 1%, up 255. The Nasdaq's up 1.7%, up 132. The 10-year is down 430 seconds. The yield 1.74%. West Texas Intermediate crude is up 3.1% at 52.67 a barrel, while COMEX gold down 0.75% at 15.0830 an ounce. The dollar yen 106.10. The euro $1.12.11. The British pound $1.21.39. That's a Bloomberg Business Flash. I'm Greg Jarrett.
You're listening to Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Bloomberg Markets is brought to you by Commonwealth Financial Network, home to the industry's most satisfied advisors. Learn more about the firm that's been putting independent advisors and their clients first since 1979. Visit commonwealth.com. Well, as interest rates grind lower, home buyers are finding it more affordable to buy. So let's get the latest on the housing market. We turn to our good friend Logan Mohtashami. He's a senior loan officer for AMC Lending Group based in Irvine, California. Logan, thanks so much for joining us again. Again, interest rates, boy, we've had them, kind of touch or get near some very long-term lows here. Give us a sense of what's going on in the housing market in this interest rate environment.
Well, the 10-year yield finally got to my 2019 forecast of 1.6%. We've had a big reversal since the lows of yesterday. But in regards to the mortgage market, right now we're seeing an uptick in refinances, but we have to be mindful that we were working from 21st century lows in refinances. So it's not like we're having another refinancing boom. I don't think we'll surpass 2016. 2016 never surpassed the 2012 refinance boom. So until the 10-year yield can actually break under 1%, we'll have an uptick in refinances, but a lot of that are the buyers of homes from 2017 to 2018, when mortgage rates are higher. Those people can do rate and term refinances. You're looking at roughly 9 million home buyers at that with those 2 years combined. That helps them get a little bit more disposable income. In terms of existing home sales, even though mortgage rates are lower, sales are down slightly year over year, inventory's up, but new home sales, that's where lower mortgage rates has really helped the housing market, is the recovery in new home sales and the monthly supply drawdown in that data line.
Okay, so let's dig in a little bit there, because we do have the 30-year mortgage rate, at least as measured by Freddie Mac, at the lowest since 2016 and continuing to fall in tandem with yields. I'm trying to figure out how much of a boost is that to the U.S. housing market and where?
I mean, really, the best place to look is the new home sales data. I mean, new home sales were trending recessionary toward the end of 2018. Monthly supply spiked up to about 7 months. And when rates got lower, because that's a 90% mortgage market, that's where the demand recovery came. So, and because of mortgage rates are low, what's going to happen is that the year-over-year data for all housing data is going to be positive now. Because the comps are a lot better, and that's where we're going to start to see year-over-year gains in existing home sales, pending home sales. housing starts and new home sales, and that's where it stabilized the market enough to where we're not going lower anymore. So that's kind of how you should look at it. It's not really boosting total home sales as much as people would like.
So, Logan, give us a sense, maybe, are there any geographic areas that are sticking out to you that are particularly strong or weak?
Pretty much everywhere outside of the coastal areas are doing fine. The areas that, like, for example, California, inventory's up, sales are down, things are taking longer to sell. That's a weakness of demand. Now, lower mortgage rates have stabilized, I would say, the California market. They've stabilized maybe the Seattle markets as well, but they're not really boosting demand on a year-over-year basis, even with the inventory increases. So those places are just pricey, and there's just the level of buyers are just not there. But if you look at California home sales for 10 years, it really hasn't done much. So we're just working off of these, some up years, some down years out here.
Well, and we have seen a slowdown in luxury home sales, certainly in those areas, as well as on the East Coast in New York City. And I'm wondering, where are we in that sort of downturn cycle?
The luxury market, mortgage rates, sometimes doesn't really impact that kind of market. It's money. Obviously we see the foreign buyers are down, from China, so that impacts just a little bit out here. But again, we're getting to areas where when you adjust it to inflation now, home prices are starting to get to levels to where during the housing bubble years, you needed exotic loans to really boost the luxury market out here. So you need to keep an eye on that because, there's no more exotic debt anymore. So pretty much everyone who owns a house can own a house in real terms right now. But back during the housing bubble years, this is where you needed, exotic products to boost the upper end of the market. And we don't have that anymore. So that's an area to always keep an eye on, considering where we are in the home price days.
So, Logan, where are we in terms of kind of the credit quality of the mortgage market right now? That was obviously, a big issue in the financial crisis. Kind of where are we now in terms of credit quality?
Credit quality is excellent. And we've never really had tight lending in America, even from 2008 on. We just lend to the people that can own a house. And I think that's the difference. This is the best loan profile I've seen in my 23 years. There's no exotic debts out there. The FICO scores, which means these homeowners have really good cash flow, are very high. They're very good out here. And the best part is that the nested equity, the equity position from buyers from 2010 to 2016 looks really solid. There's no cash out boom. This is as good as it gets in terms of credit quality in the history of America right now. And I hope we don't ruin it. I know there's a lot of people out there that says lending is tight. I totally disagree with them. This is how it should be. And you'll see that when the next recession finally hits, we're not going to have a mega wave of defaults like we had in the previous cycles and really uptick supply. It'll be more late cycle lending, low down payment, low FICO score, home buyers running into the recession because they have no selling equity. But the credit quality, I cannot stress how wonderful it looks in this cycle.
So, Logan, you nailed it when you had your call for 10-year Treasury yields. They did hit your target price for the year, and they have bounced from there, currently trading at 1.75%. Where do you see them going through the end of the year?
Boy, that really, I think that tweet you and I had about 15 days ago, we said, yeah, it could get to 160 with one sell-off in the stock market. But you know what? Panic buying. That's what I saw. The last few days, it was just panic buying, similar to what we saw in 2012 and 2016. Now, I'd like to say, hey, we got to the 160 level, and that's it. We should hold that level, and yield should rise. And I've always held at this 160 level because I've always had that in my prediction articles for the last 5 years. But right now, we have a lot of things in play that I just can't, I can't model out. Who knows what Trump's going to do with China? Who knows what China is going to do? Brett Exit 2.0 is going to come at Halloween. Imagine adding that to this dance right now. There's just so many headline risks. But in terms of the economics, because PMI data has the ability to even go lower, that can drive yields lower globally and here. But we're not going to have a double-dip manufacturing recession that had the same kind of impact as 2016. So I will hold the line here at 160 and say that this is the low for the year. But if you get PMI data to get worse, if you get the China and Trump trade wars to start, going at each other left and right, if Brett exit 2 becomes really messy, then absolutely, not only can the 10-year yield go below 1.3%, we could take the 10-year yield below 1%. But those are things that we can't control. I mean, you just can't control those.
Logan Mohtashami, thank you so much for being with us and sharing your insights with us today. Logan Mohtashami is Senior Loan Officer at AMC Lending Group, joining us on the housing market and yields. Him saying that 1.6% on the 10-year probably is the year's low, but the uncertainty factor has risen dramatically. Coming up, Bloomberg Politics, Policy, Power, and Law, where we turn our attention to all things Washington, D.C. I'm Lisa Abramowitz, along with my co-host and colleague Paul Sweeney. This is Bloomberg Markets.
In other news, as investors suffered through the year's biggest equity rout Monday, one of the market's most important players emerged as a buying force. Corporate America bought back shares at a furious pace as the S&P 500 plunged 3%. This is Bloomberg.
Message and data rates may apply.
Ladies and gentlemen, this may be the last time you ever have to worry about hair loss. Because Bosley is the real deal. They're giving women and men their hair back permanently. Their real hair. All it takes to get started is a single text message. You'll get an absolutely free information kit and a free gift card when you text GREAT to 85850. Bosley will show you, for free, how great your hair could look. You'll also see, for free, why you're losing hair and how to get it back. Women and men all over the country trust Bosley because they're America's #1 hair restoration expert. Ahead of the curve with the latest technology. And the best part? Bosley has permanent solutions to hair loss. You'll love what they'll do for your hair. So drop what you're doing long enough to send a text. Get your free information kit and gift card for $250 off by texting GREAT to 85850. Don't forget, that's GREAT to 85850.
This is the Bloomberg Green Business Report. They may be wildlife, but they aren't exactly the kind of wildlife you might expect to find in Florida. Exotic Burmese pythons are an invasive species there with no natural predators, and the snakes are believed to have eaten more than 90% of the mammals native to the Everglades, threatening biodiversity. So Florida will be sending snake hunters into remote federal swamplands to kill the predators.